Hello everyone, welcome back to Edwards Trades. I'm here again giving you guys another market update, my technical analysis on the SPYs, the QQQs, as well as a few core listed companies, giving you my overall thoughts, analysis, predictions of where I think the market's going to be heading, as well as where we currently stand at this given time. So yeah, let's get straight to the point. So last Friday, we managed to hit all-time lows. If you go to the weekly time frame, right, and we zoom out just a little bit, the market has actually managed to break summer lows. So this is right here, June 17th, the lowest that SPY went was roughly around 361. During Friday's trading session, we had, of course, 2 weeks of selling right here from the start of, I believe this is September, so obviously the end of September. 3 weeks of selling pressure have taken place. SPY managed to break summer lows because you have one low here and another low here. SPY broke 357, which was summer lows, right? Creating a new all-time low during the 30th, which was last Friday. And of course, during we are in the new month, so we are in October now. Moving on to the daily time frame, the market actually managed to have a dead cat bounce. We managed to see some relief as well as a gap up. We saw first the SPY come up during Monday's trading session, and of course this is Tuesday's trading session, but when I'm uploading this video, the market managed to gap up during pre-market hours, and now we're currently sitting in the green around 377.97. So to pretty much explain what kind of happened just for these 2 days, first and foremost, we had so much selling pressure taking place throughout this time that I was kind of expecting a dead cat bounces, which would explain these two green candles that we're seeing currently, as well as this gap up here, to take place because of the demand selling pressure. It's also known as a bear market rally, and for other instances, it's also called a relief rally, just to the people who had put positions here are able to reclaim, take profits and allow the bulls to try to make a little bit of earn a little bit of money back after this demand selling pressure, and of course start the whole process over, rinse, repeat. Why am I saying this? Because of the fact that if I go ahead and show you guys my drawings, we still, of course, as I said in, for the past, like, I don't know how many videos now, again, we're still in an overall downtrend. I know there's so many lines on the screen. Those are just, the 10 key levels that I have at the moment. But again, the bigger picture is that we're still in a steady downtrend. Again, we could be setting up for another lower high situation again. I know I've been explaining it in my other videos, but again, for those of you guys who are new to tuning in, I'm gonna say that again. We had our high here during I believe this is August, middle August. You have your high, you have your lower high here. Whoops, I didn't mean to draw that, my bad. Wrong drawing. Excuse me about that. But of course, again, you have your high, you have your lower high here, you have another lower high here in this region, and then of course, the market kind of, dropped immensely. So now we could be possibly forming another lower high, so on and so forth sometime this week. So of course, there's no major economic news this week, so the market's just being the market. I do believe this Friday we have one news outlet, which is unemployment data that's taking place. I will double check and confirm that, but I do believe it's this Friday at 8:30 in the morning, where we're going to get jobless claims and see how the economy is doing overall. But sticking to the key levels for SPY and the SP 500, we're going to move on to the 4-hour time frame and just take a little deep dive of exactly what happened during this trading session, and again give you guys my opinion and my thought process of what's going on here. So again, this is a 4-hour time frame that we're looking at. Again, daily and weekly is still showing an overall downtrend. Market here Friday, this was Friday, hit all-time lows here, which is roughly like 356, 350. Again, hitting all-time summer lows, and of course the market managed to rally just a little bit, dead cat bounce, come back up, and of course break resistance level, which is around 370. Now, of course, this was prior resistance during for quite a while here during this sideways congestion during last week's trading session, and again the market broke down. Now, what concerns me here about the most is the fact that of course, although the market may seem as if we're kind of getting a bounce back, we need to, my analysis is that we're just getting a dead cat bounce. in order to relieve some of that selling pressure, in order for new money shorts to come in, short the stock even more and bring the market even further down. I don't think that this is a complete overall reversal, especially since not going to get too in depth in here. We kind of gapped over this key level here without fully retesting 370. If we go to the smaller time frame here, we have this big hole here, another hole here, and the market just, rather than come back down and retest it, we kind of just like barely, scrape the bottom of it. And because of that reason, I think the market's getting ahead of themselves. And the reason why I'm saying that is because gaps usually tend to fill. So my assumption, maybe sometime this week, maybe later on, maybe when employment data comes around, the market continues to rally just a little bit, creating a lower high on the daily time frame, just so when employment data comes out, maybe the market will drop back down and fill this gap down, and then of course, coming back down to summer lows and creating a new all-time low. That's just my overall assumption. But as far as the overall trading session, which was this Tuesday, which is when I uploaded this video, a whole lot of sideways action. The market really wasn't seeing a whole lot of activity during the tech sector wasn't seeing a whole lot of activity. Why? Because again, it was just sideways congestion, not a whole lot of movement here. Of course, when zooming out here, you guys can see clearly that resistance is here, here around 370. And again, what concerns me the most is that we weren't able to retest it as fully as support. We kind of just went about, or the market really just went about its way and just ignored that level. So I would be a little bit skeptical, trying to, not trying to get ahead of myself or the market getting ahead of itself. But again, just seems like a dead cat bounce, bear market rally. I'm expecting a reversal sometime soon, because again, the fact that we broke summer lows, and the only thing that kind of relieved it was the fact that the indicators were indicating oversold, which means that the markets were a little bit too low. We could be seeing more selling pressure, throughout the year, because again, bigger picture, bear market, lower lows, lower highs. We're not seeing a huge reversal just yet, but for the beginning of October, again, it's overall green. So I would just look out for this 370 gap fill here and see, whether or not the market can, reclaim that as support sometime in the near future. Now we're going to take a look at the QQQs, and then I'll move on to the core list of companies as I always do. So again, much like SPY, the same exact reason, except, well, two things to point out here. On the daily time frame, again, it's still the same exact level here. Excuse me. We have, again, lower highs and lower lows, continuing this overall downtrend. SPY, or the QQQ, did manage to break out of this trend line here, although it could be readjusted. But we did manage to kind of again gap over this major summer low of 267, gapped over resistance of roughly 280, and we're kind of sitting pretty during after hours right above that level. We did manage to come back down and retest this 380 mark, so that's pretty much a good thing. But again, what concerns me the most is SPY and the NASDAQ not reclaiming these levels, which I'll take a look at the NASDAQ just to reconfirm my overall thesis. But again, I'm expecting this gap to be filled sometime soon if we see some more selling pressure take place. But for the most part, we did retest these levels here, which is a good thing. So again, you have your resistance. Now it's turning to support. So again, if we're able to hold 280, we're probably going to see maybe more of a relief rally later this week. But again, levels to look out for QQQ would be 286. Or actually 285, excuse me. After 285, we can see we're probably waiting for the market to, slowly and surely, make baby steps and obviously create a new lower high sometime this week. But again, I would not be too bullish just yet, because again, the bigger picture on the weekly time frame is that we're still in an overall downtrend. We were very close to continuing selling pressure during the last Friday's trading session, reaching all-time summer lows. Market gapped up, which is also known as a dead cat bounce or a relief rally. And again, I would be a little bit skeptical, but the market tends to do what the market tends to do, does whatever it wants. So I'm just saying my analysis is that I'm just seeing another lower high situation take place. But again, we'll see. And of course, more or less speaking here, we did retest these levels at 280. So again, the next level to look out for would be 285, and then so on and so forth. So I'm going to take a look at the NASDAQ real quick. NASDAQ right here. So again, as you can see here, if I go to the 30-minute time frame, again, we had this huge gap reversal here as well. We did, in this previous area, we tested resistance more than once and twice. And again, we broke down, gap down, resistance, 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 so on and so forth. And then we gapped up during, again, today's trading session. Now we're holding roughly above 11,000. So again, I wouldn't be too bullish just yet, because again, we have a lot of selling pressure and a lot of recovery to take place. Of course, we've been seeing a lot of selling pressure during the end of September, and now, usually the new month means technically indicates excuse me, I lost my train of thought here. Typically when a new month begins, the market tends to go green, so I'm not really too surprised about that. But again, we could be seeing another lower high situation take place. I'm not really too concerned that the market's just is bullish just yet. So again, key levels to look out for again would be, of course, if we're able to reclaim roughly above 11,656, which is this red line I have marked here, and then continue on to break this overall trend line that I'm drawing out now. But again, for the record, market's still in a downtrend. It's just a relief rally from which is what I'm guessing it is. So again, we have this big hole here. So if sellers take control, let's say we reject the psychological level of 11,341, we could be seeing, the market come back up here, fail to break this level, and we just come back down and, create new all-time lows. So again, I would be really, really cautious about, seeing this as a full-on reversal, as I explained. It just seems like to me another, lower high situation taking place. So I really wouldn't get too, bullish just yet. Just, giving you guys my overall prediction. So besides that, now we're going to take a look at Apple and talk about key levels within that stock. So again, because SPY and the QQQs all work for the tech sector, of course, it's going to be rinse repeat about exactly what I'm saying. So with that being said, just like SPY and the QQQ, daily time frame, Apple gapped up over resistance of roughly around, first and foremost, before I even explain that, we did held support of roughly I would say 137 for Apple, which was, of course, the summer low, or close to summer low support here during, I believe this was, the end of June, beginning of July. You have your support here, support here, support here. So the market did manage to hold. Apple did manage to hold above support of 137. Let me go ahead and go to the smaller time frame here. We've managed to break out of this resistance zone. Again, before I even get to that, let me just say again that this 143 is clearly resistance. We have, one touch here, rejection, support here, rejection, again, rejection here. We were testing these levels Monday, and the market gapped up without retesting 143 as support, and now we just have this big hole here. And like I was saying previously in the SPY and the QQQs, this gap is called the gap. Technically, it's not really a good thing, because gaps usually tend to get filled, and if the market is still continuing to see selling pressure, which is what I'm assuming throughout, maybe the rest of the year, the market could continue to rally. And the fact that we didn't retest 143 is a bit concerning. I was expecting the market, for a healthy, quote unquote, retest, that the market or Apple would come back down, retest 143 early in the day, and then come back up. But now we're sitting again at another resistance of 146 here, which the market wasn't able to hold above it. So we're kind of seeing a little bit of rejection. But again, the fact that we weren't able to reclaim 143 as support is very concerning, because again, if you were gonna because again, this gap up is usually not a good thing, especially if we don't come back down and retest these levels. But for the most part, again, it is a new month, so again, I'm probably expecting like a bear market rally to take place. But again, I really don't see this this kind of like green day for Apple lasting so long. But yeah, I don't mean to, keep on blabbering about it, but I'm just trying to explain to you my reasoning behind why this is kind of like a little bit sus. If, I don't want to use that word, but it's kind of weird that we didn't retest 143, which was clear resistance in prior trading sessions, and which is what led for Apple to go from 143 to 136, and then we, again, rejection. We just gapped up over it, clearly not retesting this level, which is critical resistance. We need to turn into support. So again, the mark, I could possibly speaking, Apple could continue to rally just a little bit more, and fill these gaps here, and then come back down sometime this week. So yeah, so let's go ahead. Oh, and for the levels to look out for, again, gap up 146. The next possible level I'll be looking out for would be roughly 148. Again, we're respecting this overall downward trend line. I'm expecting another lower high situation here, right around 148, 150 maybe, if the market's able to push a little higher. But again, I'm expecting another lower high situation to take place here, more selling pressure, so on and so forth. So that's Apple. We're going to take a look at Tesla right now. I apologize if I'm getting too technical with it. I'm just trying to explain to you guys my reasoning. Of course, trying to explain my reasons for why. Oh, and then my last video, I did say that for Tesla, of course, we rejected this trend line here. We rejected levels roughly around 288. We had selling pressure here. The Tesla, for the record, is not really following the market, so I kind of haven't been keeping track of Tesla, but it really hasn't been following the market as far as levels, and when SPY and Qs have been moving. It's kind of been doing its own thing. So I'll just explain this really briefly. So again, we rejected 258 here. Selling pressure. 258 was rejected once, twice. We weren't able to retest this resistance and hold above it. So the market, or excuse me, Tesla, drop back down, and we could be seeing more selling pressure taking place in Tesla. Again, levels to look out for, I would say roughly around 230, just because of the fact that there's a whole lot of congestion, a whole lot of sideways action here. But just so for reference, I'll draw a line here so you guys can see what I'm talking about. I would say roughly around here is like pretty much congestion region. So reject 258. We're probably seeing around roughly 230, 235-ish here in this region here. But again, whole lot of choppiness, not really a whole lot of movement taking place. Same thing, downward pressure. So now we're going to take a look at Microsoft. So again, Microsoft, like SPYs and the QQQs, gapped up after retesting these resistance level. Again, we broke resistance here. Let me go ahead and get rid of this here. We managed to not only hold support, or we broke support below 236. Again, Friday's trading session, we've held above it, and now we gapped up, and now we're kind of sitting at resistance, psychological resistance of roughly 251. So we're going to wait and see if we can break over that. But again, just like Apple and SPYs and the QQQs, we gapped over it without retesting levels, even on a smaller time frame. Again, we didn't retest these levels, so it's a little bit concerning that we just gapped in gold. And without retesting these levels, it's kind of like, is it really going to hold this support the next time we come back down and retry this level? Is it going to fill the gap? So I would be very cautious about considering this being a whole quote unquote reversal, because again, resistance for Microsoft 241 here, here as well, and then sideways, and we just gapped over without reclaiming this as support. Quite concerning. So I'm expecting, again, another more selling pressure to take place. But for now, levels to look out, we're above 251. We got to break this overall trend line here, which I would say is 260, and then from 260 to 268, if we reject these levels, again, back down to 240, back down. If we reject 251, back down to these levels of 241, and back down to 236. So now we're going to take a look at NVIDIA. So not really a whole lot of movement in NVIDIA, but again, same thing, like SPYs and the QQQs, market gapped up. We're kind of just sitting in this like neutral zone here. So we have a range bound from 122 to 140. If we want to go to the 1 hour time frame for NVIDIA, let me go ahead and draw it since I see it right here. Resistance here, which is roughly in this peak here, Yeah, that's good. To 126 here. Again, market just gapped in gold without reclaiming this as support. Quite concerning because, again, resistance, resistance, resistance. Not trying to sound like a broken record, but, again, gaps need to be filled. We need to reclaim this as support. So I wouldn't be too skeptical about this move. But, again, those are the major levels to look out for. And we'll see if the market holds up throughout the week. So the last company I'm going to look at is AMD. And, again, AMD kind of had this, let me go ahead and draw it out here. We kind of hit all-time low for AMD, which is $62. We've managed to hold up above that support level. And of course, in this region here, we managed to hold, break and hold above $66. And we rejected 68, which is clear resistance from the past, as you guys can see here. Of course, you have your resistance, 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 resistance here. We rejected 68. So again, if we able to hold above 68 and turn into support, the next level we'll be looking at is 74, just to fill this overall downward pressure here. But that's the next resistance level I'll be looking out for. And if not, if it doesn't break 68, we could be seeing another retest of $66. And of course, we break 66 back to lows here of 62, and then we go to the weekly perspective. Below that would be roughly $58 here, which would be the next level we'll be looking out for AMD. And what else? I think that covers all the core listed companies here. But yeah, again, if I go back to SPY as a refresher and a quick recap, the market is still seeing immense selling pressure. Again, this is a little bit of a false rally in my opinion. I think the market's going to see more all-time lows taking place. Again, what would actually, to kind of make my claim invalid, right? Let's look at the bullish case scenario just to throw it in there, right? What would make this a whole reversal in a bullish market is, I would say, if we're able to hold above 390 here, if the market's able to hold above well beyond 390, and also it would be roughly 400, I would say, to of course create a higher high situation and trying to, of course, get out of this overall downward pressure. But again, until the economic news and inflation and all that stuff tones down, I'm still seeing more selling pressure. Again, this Friday, let me go ahead and double check before I even continue to say that, but I do believe we do have jobless claims this Friday, so that could be a clear indication again of where the market wants to be heading. But again, I would be very cautious about today's move or this week's move because we haven't retested these levels yet. We have this big gap up without really coming back down and reclaiming these levels. So yeah, I would be very skeptical, a little bit cautious here, but again, downward pressure seems to be continuing, more and more. So we'll see if the market's able to recover just a little bit. But again, I'm still seeing lower highs taking place. This could be another lower high situation. So yeah, so that's my overall take on the stock market. And that's a really, that pretty much covers everything, really. I will try to do maybe in the near future another video on maybe cryptocurrencies as well, because I know I kind of been leaving that out in my videos, but I'll definitely take a look at cryptocurrencies and do a separate video on that in the near future if you guys want me to. But yeah, this pretty much covers the tech sector here. So I hope you guys enjoyed my video today. Please like and subscribe, and I'll see you guys this Friday. If I'm not mistaken, that is the jobless claims report. I'll talk a little bit about that this weekend, this Friday possibly, and we'll see where the market heads from there. But yeah, that was today's technical analysis video, and I'll see you guys later this week.